Have you ever thought about what will happen if the US dollar loses all or some of its value? The US dollar is used by people from all over the world, but what will happen if the dollar suddenly sinks? And how will that affect the world we are living in today? Keep watching, for today, we are going to be discussing 11 consequences of a weak dollar. Point 1. Inflation. Picture this, a weaker dollar sending shockwaves through the economy, driving inflation to new heights. As the dollar sinks, the prices of imported goods skyrocket, causing a surge in the cost of living. From everyday essentials like electronics and clothing to vital commodities like oil, brace yourselves for the possibility of an inflationary storm. Point 2. Import costs. Imagine this scenario: the dollar's decline leads to a drastic escalation in import costs. Suddenly, that dream car you've been eyeing or the latest gadgets you desire become even more elusive due to exorbitant price tags resulting from increased import expenses. Prepare yourself for a potential hit on your wallet. Point 3. Boost to exports. Now, let's explore a glimmer of hope amidst the chaos. A sinking dollar can be a boon for exporters. As the value of the dollar dwindles, the international markets open their arms to American goods, enticed by their newfound affordability. This surge in demand can breathe life into businesses, fueling increased export activity and, in turn, revitalizing the economy. Point 4. Debt burden. Brace yourselves for a potentially tumultuous journey through the realm of debt. As the dollar weakens, the cost of servicing U.S. debt obligations escalates. Given the substantial national debt, the sinking dollar could strain the federal budget, burdening the nation with mounting borrowing costs. A perilous path awaits. Point 5. Impact on investments. The intricate world of investments, forever intertwined with the fate of the dollar. Prepare for a roller coaster ride through the realms of financial markets. A sinking dollar sets in motion a series of events that can reverberate through investments. Investors, ever vigilant, seek alternatives to the faltering dollar, triggering capital flows, potentially impacting stock market valuations, bond demand, and instilling a heightened sense of volatility within the financial realm. Point 6. Global economic implications. We now enter the realm of global economics, where the dollar's decline echoes across continents. Brace yourselves for a symphony of interconnected consequences. As the world's primary reserve currency, a decline in the dollar has profound implications for global economies. Currency exchange rates fluctuate, trade patterns morph, and investment flows redirect, heralding a time of uncertainty and potential destabilization in international markets. Point 7. Increased tourism. Imagine a world where the sinking dollar beckons international tourists to the shores of the United States. With the dollar's decline, the United States becomes an irresistible destination, offering international visitors greater purchasing power. Prepare for an influx of tourists seeking to bask in the allure of affordable travel amidst a weakened dollar. Point 8. Current account deficit improvement. Let's take a moment to explore the potential implications for the U.S. current account deficit. As the dollar weakens, a glimmer of hope emerges on the horizon. Lower exchange rates render American goods more enticing in international markets. A surge in exports and a potential decrease in imports may help narrow the current account deficit, bringing a sense of balance to the economic landscape. Point 9. Higher commodity prices. Brace yourselves for the impact on commodities, those essential building blocks of our modern world. As the dollar sinks, the prices of commodities soar to new heights. Whether it's oil, precious metals, or agricultural products, a weakened dollar means it takes more of them to match the diminishing value of the dollar. Industries heavily reliant on these commodities may face the challenge of rising costs, potentially leading to a ripple effect throughout the economy. Point 10. Increased foreign investment. Imagine a scenario where the sinking dollar presents a silver lining for foreign investors. As the dollar's value shrinks, U.S. assets become all the more appealing. Foreign investors, armed with strengthened currencies, may seize the opportunity to acquire U.S. businesses, real estate, and stocks at a more favorable cost. This influx of foreign direct investment has the potential to breathe new life into the economy, propelling growth and innovation. Point 11. Impact on global trade imbalances. Brace yourselves for the tumultuous world of global trade imbalances. As the dollar sinks, it may trigger a series of actions and reactions from other nations. Currency devaluations, trade restrictions, or even retaliatory measures such as tariffs and trade barriers may come into play. The delicate balance of global trade relationships may be disrupted, potentially leading to heightened tensions and a reshuffling of the international trade landscape. Now that we've explored the myriad of possibilities that unfold when the dollar sinks, it's important to remember that these consequences are intertwined with a complex web of economic factors, market dynamics, and geopolitical forces. The future of the dollar and its impact on the global economy remains uncertain. As always, stay informed, adapt to changing circumstances, and make prudent decisions in navigating this ever-evolving financial landscape. That wraps up our deep dive into the potential consequences of a sinking dollar. We hope you found this exploration insightful and thought-provoking. As always, remember to subscribe to our channel for more captivating discussions on economics and global affairs. Until next time, stay curious and stay informed.